Thank you so much, Tracy. Good afternoon to everyone on the East Coast or Central. If you're in the West Coast, Mountain, or somewhere else, good morning, good evening, wherever we are. My name is Matt Foreman. I'm a tax lawyer. I'm one of the helpline volunteers with Savvy Ladies. I'm here with Alicyn McLeod. She's a helpline volunteer as well. We'll introduce ourselves in a moment. I'm just going to share my screen. We put together a slide deck. If anyone has any questions, we are happy to answer as we go through. However, we do request that you just sort of raise your hand. If you could, that probably a little more orderly way, although this is an open one. So if you have any questions, you can literally just start talking. So Alicyn McLeod, CPA, CFP. Oh, it's from the video. Thank you. And she has a BBA in accounting and an MBA from Augusta University in Augusta, Georgia. She's both a certified public accountant and a certified financial planner, a twofer right there. She works with high net worth individuals and families, including company executives, successful solopreneurs, if I pronounce that right, retirees, and those with inherited wealth. She has more than 20 years of experience as a tax professional, wide range of areas such as closely held multi-generational businesses, inbound international real estate investments, nationwide nonprofits, and trust and estates. Her background allows her to be an active participant and collaborator with her clients' other financial and legal advisors. She resides in the metropolitan Atlanta, Georgia area, and is an active member of the local community and the financial services community through the local and national groups. You can follow her on LinkedIn. She has a great LinkedIn profile for regular tax news, and she also posts on TikTok, which is I'll just say the purveyor of the worst tax advice that exists. Alicyn being the one of the few exceptions to that rule. She really does do a great job there. Hi, I'm Matt Foreman. I'm going to introduce myself because my bio is way too long. I'm a tax lawyer in New York. I'm based out of New York City. If you look behind me, I'm going to hold up my hand. That is the Empire State Building. That is not a Zoom background. That, in fact, is the Empire State Building. Fortunately, I'm on a tall floor of a tall building that gives a great view. Most of what you see right here is the Times Square Hilton, which is much less exciting. But I'm a tax lawyer in New York City. I focus predominantly on businesses and a lot of work with various corporate transactions, predominantly mergers and acquisitions. I have a lot of experience, including a good amount of my time at Legal Aid, where I spent time how do I put this? Helping people really, and helping individuals and working through the complexities of dealing with the IRS and various issues that came along that are helpful. We just hope, I know along with Alicyn and everyone at Savvy Ladies, hope you enjoy this, hope you get a lot out of this. And if you have any questions, there's a number, I think we're up to 6 or 7 now, tax professionals in the helpline, and really hope if you have questions, ask the questions. We want to help. We're here to volunteer. We're here to help. So we want to do it. Now we have a basic overview of what we're going to talk about. We will talk about these in much more detail, I promise, and then I will stop talking for the most part. I will split it more between myself and Alicyn. So we're going to talk about choosing an entity and how are they taxed, whether it's an LLC, an S corporation, things like that, whether you even need an entity, what's deductible, what not, what expenses go into there, sales taxes, estimated tax payments. Thank you for posting that. Estimated tax payments, issues with retirement plans, how to save for retirement when you have your own business. I know I work for a law firm, so I don't really worry about that. We have a 401k, I have some stuff on the side, but that's something that when you're your own boss, you really have to put some time into. Who do you need to advise you? An attorney, an accountant, CPA, enrolled agent, or bookkeeper. Why that W-2 job may be preferable. I think if you look at all the things you have to deal with right there, on the screen, that may scare some people already, but we can get through it. It's not that complex. And how to deal with a W-4, which is a complexity in and of itself. And now, there we go. Choosing an entity. I'm going to hand this over to Alicyn.
Hey, good morning, good afternoon, everyone. I'm so glad that you're here, and I'm glad we get a chance to speak with you today. I want to talk about one of the most controversial and interesting things that I see brought up all the time, and that is an LLC. The letters LLC seem to be thrown out there like they are this magical catch-all that can do everything and be everything. People think that they need to have an LLC to have a business. It's not true. They think they need to have an LLC to deduct expenses on their tax returns. Not true. They think if they have an LLC, they can deduct anything. Not true. So I want to talk a little bit about what that is first, because again, it's just the thing that I see most commonly misunderstood. And as you'll see it so much if you're starting a business or if you already have a business, it will help to really understand what that is. So first, kind of step back a second. It's helpful to understand the concept of a legal entity. And a legal entity is a way that a business can structure itself to do business. So think about this as an example. Say you and 9 of your friends want to form a business and you're going to sell some artwork on Etsy. Now, you can either go to Etsy and have 10 accounts, and then anytime somebody wants to buy something from you, they have to divide their payment by 10 and make 10 small payments, or they can make one payment. You have one Etsy account. Which do you prefer? Well, you probably prefer the one where there's just this one entity, one business, one place for all transactions to happen. And so when you kind of take that at a broader perspective, when you have a legal entity that allows for multiple people to come together and operate as one, then you can do business more easily. Now, on the downside, you can also be sued more easily as a business because there's one point of contact for a lawsuit. But really, this is just how things work. And an LLC is just one type of legal entity. It's one way that a business can structure itself so that it can do business more easily for all of its owners. LLC stands for Limited Liability Company. And a lot of people think that LLC means that your business has some magical tax attribute where, again, you can kind of deduct everything, or that there's some special benefits like, oh, well, if I do business without the LLC versus with the LLC, I can or can't deduct something. That's very rarely, if ever, true. So just know that when you're looking around and you're thinking, okay, well, me and my buddies, or just me, we're going to get together, we're going to do this business. You may or may not want to be structured as an LLC. Yeah, the short answer is you want to talk to an attorney about it, but I wanted to bring that up and be very clear that it's really a lot of the TikTok stuff you see or things all over social media that you have to have an LLC. They're just not necessarily true. So let's talk about the other ways that under state law you can do business. There's a few other ways. One is a corporation. Another is a partnership. So just again, depends on what you're trying to accomplish, depends on what industry you're in, depends on how big your business is going to get, depends on who is going to own your business, depends on what state that you're operating in, depends on what state that you start out your headquarters in. There's many, many different factors that will determine what type of legal entity, an LLC, a partnership, corporation, perhaps something else, if that makes the most sense for you. Matt, do you have anything that you want to add on that?
Yeah, thank you, Alicyn. No, that was great. One thing the magical LLC, I think is true. It's very true. A lot of times, talking to an attorney, talking to someone who can help you through it, just understanding what the benefits and detriments of each one are. There are a lot of businesses. I know my father, for example, for 35 years was a dentist and never had an entity, literally never had one. So there really is no reason to have one there's no reason you have to have one. But as Alicyn said, it can be helpful to really sort of put everything together. Everything's in an entity. It's a little cleaner that way. So back to you, Alicyn.
Yeah, for sure. So let's talk about the tax ramifications of how your business is structured. So again, this concept of legal entity is going to vary state by state. I'm in Georgia, Matt's in New York, you are wherever you are. Each state is going to have rules around how legal entities are created in their state. But then we have taxes. And while each state does have taxes, the first place to start is at the federal level, the national level. And so you probably heard the name IRS, the Internal Revenue Service. So they're the folks that are in charge of making sure federal tax laws get followed, the tax laws that Congress creates. So you have your legal entity under state law. but then you have how that legal entity is treated for federal tax purposes. And you have a few different options. And the one I really want to talk about is S corporations. And that is because just like you'll hear LLC as a magical phrase thrown out everywhere, the same is true with S corporations. You'll hear, oh, you have to have an S corporation. You must run your business this way. And I'm here to tell you, and Matt will tell you as well, that's simply not true. An S corporation may or may not be a good fit for your business. And again, it's going to depend on so many factors that you really need to talk to a professional CPA, enrolled agent, tax attorney, corporate attorney. It could be one or more folks. But before you, especially if you're just starting a business or just thinking about it, the short answer is that something like an S corporation may be a little bit more sophisticated than you need starting out. And in fact, may not be something you ever want, just depending on the type of business you have, the size of the business, where the business operates, what industry you're in. Again, it's very similar to creating a legal entity to do business in. Your federal tax structure was just going to depend on a ton of different factors that people like me and Matt, we get paid to know. This is what we do all day. Just be careful when you're buying into all the social media hype. A lot of it is just not correct.
I 100% agree with Alicyn. Her points are correct. And one area, in terms of choosing an entity that I always point out is, you probably never want to be a C corporation. They're really reserved for large, public companies tend to be them, and actually a lot of nonprofits are, but also, so really the general ones that I tend to kind of fall into, right, is either a partnership, a single member LLC, which is on Schedule C, which is part of your individual tax return. It's actually probably the simplest way in terms of tax compliance to run your business, and then an S corporation, which is a separate return altogether, which was what Alicyn said. It can get more complex. There's a lot you'll see on social media about, what is the dollar threshold you need to make for it to become more tax advantageous to be an S corporation. And I'll just say aggressively disagree with that. I don't think the tax benefits are there as much as people seem to think they are, and it can lead to complexities long term. A lot of people, when they're forming them, and I know one area that I talk about with Alicyn is, how do people get help? And what, lawyers, accountants were expensive. A lot of law schools and a lot of MBA programs, business schools actually have pro bono help in these areas. So if you live in an area with one look on it, there are a lot of pro bono clinics you can use that'll get you free legal advice that are supervised by a practicing attorney. They're law students, and they're learning, you're learning, and you can work through it. So that can be a good way to get help if frankly, it's not in the budget to hire a bunch of advisors. I guess next slide. I say that like I'm not the one controlling the slides. What is deductible? I think Alicyn, I think this was you, or is this me? This is you again, right?
You, but I'll talk about it.
I'll do it. We'll have fun with this. So
I'll critique you. I'll make sure you're right.
All right. So this is one. So Alicyn talked about how people say if you put all of your assets into an S corporation, which you hear on social media, which is incorrect, is if you put all your assets into an S corporation, you can deduct your personal expenses. And I promise you, if you search on TikTok right now, you will find a non-trivial number of things that they talk about using business trusts, and they talk about this deducting, that deducting. In order for an expense to be deductible, there are really 3 requirements. Okay, the first one is it must be related to an actual business, and your personal expenses are not an actual business. The next 2 are sort of 1, sort of 2. Ordinary and necessary business expenses. Okay, so the question is not ordinary, necessary. The question is, what is ordinary? Then the second question is, what is necessary? Ordinary means what is ordinary for your type of business. So let's go back. Let's say you're starting a business. You use Alicyn's example. You're going to sell artwork on Etsy. Great idea, right? Etsy's a phenomenal platform. I actually have some art over there that needs to be hung that I got on Etsy. So really phenomenal platform. I'm a big fan of it. So what is ordinary for that kind of business to use as an expense. If you're making artwork on Etsy, your Porsche is not a business expense. It's just not. There's basically no way it can be, because that's not something ordinarily people in the business of producing art and selling it use as a business expense. The next one is necessary, right? Is this actually necessary for your business? There's a lot of ways to sort of look at this. There's a lot of ways to sort of think about what's necessary. But again, I always go back to the Porsche. What is necessary? What is ordinary? What do you usually do? And what do you want to do? The IRS will, on a lighter level, critique for necessary is the amount of the expense necessary. Let's say you have a job where you have to drive from point A to point B, right? There's a difference between having a Honda Civic and having that as a business expense, and again, having the Porsche. Do you really need the Porsche to get you from point A to point B? It depends. There are businesses where you need that market. You need to show everyone that you have a Porsche. They're very few. They're extremely little. A lot of people, you'll find stuff about deducting your clothing for work because you have to dress in a way and things like that. There are influencers where that may be true, and there is an extremely limited one. But the example I always give is ABBA. It was actually not litigation in the US. It was where they're from. I believe they're from Sweden, although someone will probably correct me on that if I'm wrong. Please feel free. Where their outfits were so ridiculous that they could not wear them for normal use. And that is why that they were allowed to deduct their outfits. What I'm wearing right now, right? I'm a lawyer. I'm wearing a suit jacket. I'm wearing a button-down shirt. I'm wearing a tie. There is nothing that is not, or there is nothing that I can deduct in what I'm wearing right now. Even though it's ordinary and necessary for me to wear things like this, it's not. This is a personal expense. I can wear this elsewhere. I do wear these kinds of things elsewhere, so I can't deduct it. What record should I keep? There is a very famous tax court case involving George M. Cohan. He was a famous Broadway producer. Look him up. He was good friends with some really famous people. Babe Ruth is the one I always cite. Because if you're friends with Babe Ruth, you were pretty famous. That's how I look at it. You need to keep records. The whole court case was about what records he needed to keep in order to take deductions. Keep receipts. Have a credit card just for your business. It sounds silly, but that little step, it doesn't make it deductible by putting on your business credit card. It makes it easier to have records to substantiate what the expenses are. Keep, for each coffee, keep that record. It sounds annoying, and your accountant will hate it if you show up with a bag full of receipts, but organize them, put them together, put it in Excel, and you're good to go. Do I need a separate credit card? No, you don't need one. Yes, I very much recommend one. Can I deduct more if I form an entity? Absolutely not. There is no situation where that's true. But I saw it on TikTok. No, stop. Okay, just because you see it, just because it's on the internet doesn't mean it's true, unless Alicyn says. Everything Alicyn says on the internet is 100% true and can be taken as fact. Alicyn, I'm open to your critique.
Yeah, no, this is great. This is great. I will kind of to summarize a little bit of what Matt was saying is that a lot of what is deductible will depend on your business. Some things are, office supplies. If you need a new laptop to access the internet, most of us need these things to do any kind of business, but a lot of it is industry specific. So if you're a content creator versus a doctor versus online reseller, whatever it is, like you might have these expenses that are a little bit different than somebody else's. Are they deductible for you or not is kind of a different question. But if for your particular industry, I go back to his words because we use them as terms of art quite often, ordinary and necessary, they probably are deductible. But it's just a matter of kind of looking and seeing. So definitely this is where you want to work with a professional who is accustomed to working with folks in your industry, and they will be able to help you, because every now and then some new type of expense will just come up and you won't know if it's deductible because you haven't seen it before, and they might have to do some research themselves. So it's really important to know that it is industry specific. And you will see on TikTok, folks will get very cute. They will put their name on their jacket and say, well, it's a uniform and it's deductible. I need a uniform, right? Yeah. Like, don't be fooled. They're just being cute. Honestly, a lot of the times, one of the best things you can do for yourself as a new business owner is worry less about being cute with taxes and be more concerned about finding new ways to generate revenue. So I wouldn't spend so much time trying to chase after cute tax law like that, like getting the G-Wagon and putting, your name on a blazer. I'd spend my time more about figuring out where my market base is and how do I go out and find them. And I like what you said, out. Now, so my perspective is a little different than Matt's. I'm an accountant versus an attorney. And so I often have seen over the years, the folks that don't have a separate bank account for their business, don't have a separate credit card for their business. And while maybe when you're in front of an IRS agent who's interested in your tax return, you can explain some things, Oh, it is so much easier if you don't even have to go down that road. Your accounting gets easier, your tax work gets easier. Life is just easier when you have a separate bank account and credit card for your business versus having it commingled. It's also, and this is more on the legal side, so Matt can tell me, it can be problematic if you're not just in front of the IRS, but in front of a judge. And you want to say, hey, I have an LLC, I have a partnership. I'm hoping that will shield me from liabilities personally that someone has sued my business for. If they look at your books and records and see a bunch of commingling, it doesn't really look like you have a separate business. If you don't have a separate business, if you're not treating your business activities as something separate, it hurts your case to say that I, as a person, shouldn't be responsible for the actions of my business from a lawsuit perspective.
100%. And to build on what Alicyn said, the biggest reason to get rid of any protection that having an entity does do, it's not tax, but there's other protections it can have from lawsuit, is you don't respect the corporate form. That's the phrase. So if you're commingling funds, you're just moving stuff in and out. It's one thing if you're just transferring between bank accounts to pay yourself and things like that. That's fine. But not respecting the corporate form as if it's your own personal piggy bank, that's a problem, and that can lead to big problems. And I would say it's not a problem until it is. It sounds silly to say, but that's it. So the next one, so sales and use tax, I think that's me again. I do a lot of work in the sales and use tax space. So do I need to charge for it? The way I would describe it is every state, first off, sales taxes are a product of of the states. They're not a federal thing. Yeah, there's a proposal. I think it's going a whole bunch of nowhere, but it's not going to be there. So each state has its own rules, and that's really important. There's a lot of commonalities. There's a lot of frameworks that exist across multiple states. Do I need to charge? It depends on what you're selling, right? So in general, personal services are not taxed. Professional services are not taxed. However, there's a number that are often taxed. A lot of barber shops and things like that do get taxed. If you're selling physical products, tangible, like everyone like me who was a business major in undergrad, they call them widgets. But if you're selling artwork, if you're selling computers, if you're reselling on it, you got to watch out for sales tax. That's a big thing if you're selling goods. So the answer may be yes. The big exception and the hardest area is you're selling software as a service, right? If you're like, look, I can make this better product, I can offer it online. That may be and may not. It depends on the specific. States tend to have very good explanations of what's taxable, what's not. I will tell you that they will always be 10 years behind. They don't update things until there's a lot of litigation on it and there's problems. And so it's just, they're not going to be there, especially in the new technology. How do I account for it? You just, when you form a business, you register it in your state, and then what you have to do is you register for the types of taxes you will pay. So there's going to be income taxes. That one's the default. And then if you're selling something that's subject to sales taxes, then you have to. What about sales on the internet? The biggest change in tax, probably the second biggest change in the past 10 years is it used to be if you were not physically present in a state, you did not have to collect sales taxes. That changed about 5 years ago now. Case called Wayfair, pretty famous retailer. Basically what it says is if you sell more than about $100,000 in a 12-month period into another state, you likely have to collect sales tax for that other state. Even if you don't enter it, you have no relationship other than you're selling goods into it. One advantage is that a lot of the platforms take care of sales tax for you, right? eBay, Amazon, Etsy, Pinterest, I could go on for hours. They take care of it. So go through it, go through the product, make sure you have the right, I know there's a lot of categories in it. I've helped some clients with it. Go through and do it. You are no fun. Yes, that is true. I am not fun about sales tax because it is a tax that is imposed on the owner, the responsible person. If you own a company and they are doing it wrong, the state can go after you individually. They can put a lien on your house. They can levy your wages. They can go after your spouse's income as well. Not great, but it's definitely something they can do. Alicyn, I'll leave this up to you to critique me.
Great. So I would add that most of us are in states and doing business in states that only subject products, actual tangible products that you can pick up and feel in your hands to sales tax. But there are a few states, a handful of states that tax services this way too. So you probably, like if you're in New Mexico, for example, there's a gross receipts tax. If you're in the state of Washington, there's what's called a business and occupancy, a B&O tax. So just kind of be on the lookout for those. Usually what I tell my clients is that every time they go into a new state, and that might be they have an employee in that state, a contractor in that state, even a contractor, they are selling into that state, whether directly or through somebody like Amazon. If it's California, if you just look at but in general, anytime a new state comes on the radar, just do a little bit of research. And this is something you may be doing yourself, but hopefully you have a professional who can help you. And it may just be, half-hour research of what kind of taxes are here, what should we be looking at? Is there something we need to register for? What thresholds are there? Because maybe you're only doing a little bit, what they might call a de minimis amount. And you can just do a little bit and it's fun and you don't need to register or withhold or pay or whatever. But in general, be on the lookout for state specific issues, and do know sometimes that states unfortunately tax services too.
Yeah, many states do. I want to pause this. Someone asked a question. This is a non sequitur, but it's a great question. Do you have, does Savvy Ladies have anyone to assist with writing a grant proposal and or finding grants for starting a business? I don't believe we do, but Tracy might have some thoughts on it. We don't. Face on her face, the answer is no. What I've actually found is the best ones for those, they're actually are nonprofits that will help you write grant proposals. So Google may be your friend. This is Savvy Ladies, right? So I want to say there is every state has a thing for women-run, women-owned businesses. The application process is there's a lot of information that they request, but they're actually not that bad. They're generally just, what is your business? Give me some tax returns. And if the business exists, some financials. And though it puts you into a community, first off, it qualifies you as a women-owned business, and it can help you get work. It can create a pipeline. The other thing I do want to say is actually a lot of them create communities within areas, and those communities have meetings and people talk, and they've actually been in some ways helped because of all the Zoom and unfortunately because of COVID. But what they do is they'll have monthly meetings where they'll talk about issues. They have listservs, and so whilst no Savvy Ladies unfortunately doesn't have anyone to help with a grant writing proposal or help writing a grant, I could get that right. What I would say is look into women-run businesses, and you can contact them. And a lot of those states, they'll actually help you with it. They're very, very friendly. They're focused on small businesses. They're focused on women-run businesses and that sort of thing. And there is government funding to help you with that. So that's one thing I did want to mention, as I saw someone posted it in the chat if that was a question. So I wanted to make sure to get to that. We'll move on. Estimated tax payments. I believe that's you, Alicyn.
That is me. Now it's my turn to chat a bit, and you get to tell me what I said wrong. So I will tell you that this is one of the biggest questions I get from folks who are starting a new business is, should I make estimated tax payments? And it is such a hard question to answer. I will tell you in general, the advice that I give people, and then I'll explain that there's more specifics to your situation. If you haven't noticed, I think this is kind of like the theme of our overall presentation, is that we can give you generalities, but a lot of these questions come down to your specific situation. So, but anyway, so it's really hard when you're first starting out. Fast forward maybe a few years down the road, you've got your business going, and when people pay you, when your expenses get paid, how much money you're bringing in, what your profit is, what the tax implications of that. You've already been around for a while. You've got your team of financial and tax and legal advisors in place. Like, you're making estimated tax payments. Maybe you have a payroll, all that stuff. But until you get there, there are so many question marks. A lot of small businesses don't make money the first year or two or three. It can take a while to get things going. And even when you are making money in those earlier years, sometimes it can be really volatile. You might get one big payment here and there. It might be very sporadic in terms of cash inflow and cash outflow. And so the question comes up of like, okay, well, how do I satisfy the tax man in all of this? I'm having a hard time kind of predicting what, keeping the lights on the business, right? I mean, the first few years honestly can be a real struggle. So the question comes up, should I make estimated tax payments? And what I tell folks that are first starting out is maybe. What I would at least say to do is take your profit. So at the end of the month, look at all the money you brought in, look at all your expenses going out, and whatever the difference is there, that's your profit. Take a third of that and set it aside. That's your budget for estimated tax payments. You may or may not actually take that money and give it to the IRS or give it to your state in advance, but it is something to be going ahead and setting aside for. Now, if you do that math, revenue minus expenses, and you have a negative number, I wouldn't be too concerned. You got other concerns right now. Don't worry. They're not coming after you for taxes on a net loss. But you do want to be setting aside for it and be thinking about it that way. So usually what I say again to my new folks is start setting aside a third, because maybe you'll owe a little bit less, maybe you'll owe a little bit more, but that gets you in the ballpark and that gets you already saving and setting aside. It's really hard for me to tell a new business owner, yes, you must make estimated tax payments, and they don't really know what's going to happen. Because let's say you start your business in January, the first estimated tax payment is due in April, the second is due in June. As a new business, do you really know even by June how your year is going to shape up? Again, fast forward 5-6 years, you probably have a good idea. But in those first few initial years, you really don't. So set aside. I don't know that I would necessarily be trying to make estimated tax payments though. I'm gonna check the chat real quick, see if anybody's asking about estimates. Nope. Okay. So I will give you a few thoughts though about kind of transitioning from a W-2 job where there's withholding to working for yourself and maybe making estimates, and talk about what are the factors in why you might want to make estimated tax payments, why you might not want to. So the reason, again, people are asking me, why do I need to make do I need to make estimated tax payments, is because most folks are coming from a position where they had a job, they got a W-2, they got a regular paycheck, there was regular federal and state tax withholding and Social Security, Medicare withholding out of that paycheck. And now I work for myself and I don't have that anymore. So I know I need to pay my taxes somehow, and estimated tax payments are that mechanism. So now, do I pay them or do I not? So some of it, again, going back to your profitability, if it's really low or non-existent in your first few years, you're probably not going to want to make estimated tax payments. Some of it might depend on if you have a spouse. If you're married or in filing a tax return jointly with someone else, their withholding may cover your small, in your initial years, your small profit. Maybe estimated tax payments aren't necessary. Are you a good saver? For my folks who are good savers, sometimes it's enough, hey, just set aside for now. Just set aside and we'll see what happens. For folks who are not good savers and would take whatever leftover profit and go to Vegas, maybe you do want to go ahead and prepay the IRS and states. And I'm totally being serious. I've had clients in both buckets, and I just lay it out like that. And I have some folks who are like, I'm not disciplined. I need to just go ahead and make estimated tax payments. Time of year. Again, going back to, and this is even for my established business clients, most folks don't want to make an estimated tax payment in April. It's just too early. Most folks don't want to make one in June. It's too early. The next payment is due in September. That's when most folks want to make their estimated tax payment, because they have a more comfortable feeling about what their business is going to do for the full year. So again, it may just depend on timing, but be setting aside in those earlier months of the year. I think that's all I have to say about estimated tax payments, Matt.
We got, no, 100% agree with everything. What we actually had a really good question, which is, can you set up a payment plan with the IRS to pay 2022 taxes off gradually? And the answer is absolutely yes. And the IRS makes it fairly easy to do, believe it or not. This is a question I get through the helpline a fair amount, Alicyn. I'm sure you've gotten it as well. I expect many of the volunteers have. What basically you have to do is look, if you you get your return, you look at it, you owe money that you don't have. A lot of people say, well, I'm not filing. I don't have the money, I'm not filing. And don't do that. Don't do that. And there's two reasons not to do that. One, the IRS will eventually figure out you haven't filed and they'll send you a letter. And late filing costs you money in terms of penalties for late filing, late payment, et cetera. What you actually want to do is you want to file and you want to pay what you can. You know, if you owe $5,000 and you can pay two, pay that too, pay that too. Then for the remaining three, what you can actually do is you can request, as Alicyn just posted in the chat, thank you so much, you can request an installment plan, installment agreement. And if the amount is under $50,000, all you have to do is fill it out, tell them how much you want to pay, over what period, and they will pretty much guarantee they greenlight it. They want you to pay. You will pay some interest, but right now, if you think about where interest rates are, the rates on the IRS payments is about 6%. So it's actually lower than a lot of what you would get. So if you think about it, geez, this is going to take me 6 months to pay off. That's really only about 3% interest. That's not a huge amount. And what that's going to do is allow you to pay. Every single state is the same way. Their rates are a little higher, but if you can pay, pay. If you're not sure, I only have enough to pay one, federal and state, pay the state. People laugh when I say that. The IRS is a lot bigger and scarier, but the states have interest rates that are higher. So you pay the higher interest rate off. Same idea, you pay your credit card before you pay your taxes. Credit cards are 19%, taxes are 7%. Put yourself in a payment plan, you'll pay it off, no problem. It will not hurt your credit score. It really won't, as long as it doesn't get to a point. If you wait 6 years and you owe a lot of money, that can be a problem. That's where, you know, I know I'm helping people with that issue. Alicyn, I know as well, through the Savvy Ladies Helpline, we're helping people. So that's something you definitely want to think about. You want to, you know, don't fall behind. That, I know that feeling when you're behind, you don't know how to dig out. Try to stay out. This is the methodology. And if you want help entering into an installment agreement with the IRS or any state, send a note through the helpline. That's something we can help you do. We can help prepare the forms. We can walk you through the process. We want to be there to hold your hand, guide you through the process. We know how to do it because this is what we do, and we want to help you. So if you can't make estimated tax payment to Alicyn, is just too all over the place, you're not profitable, but at the end of the year there's money, but you've sort of spent it, let's put you in an installment agreement. Let's keep yourself compliant and let's keep things moving forward. And that way you're not going to feel the weight of just adding things. You can do it. So that's something we definitely want to help you with. So Alicyn, I hope you were nodding, so it seems like I did all right.
Yeah, I love that you went there. I'm so glad that you answered Hope's question. So what I would add to that is Matt glossed over this a little bit. I want to emphasize because it's so important. A lot of times, especially if we feel shame about our financial situation, which is very common, we don't want to file our tax return when we know we don't have the money to pay the balance shown on the tax return. Unfortunately, the IRS doesn't care about how we feel about our money and our taxes. And it is very, very, very important to file your tax return and file your tax return on time, even if you cannot pay the balance you owe at the time. They do not like it when people don't file the tax return. It becomes a very big deal very, very quickly. So make sure you at least file the tax return, and then you can figure out what to do about the balance you owe. The second thing is you have got to be current. So if you say I'm in an installment agreement for last year that I couldn't pay, and I'm having problems with this year too, that needs to be addressed. Because if you stop filing your tax return, stop paying your taxes, the IRS and the states can say, oh, well, we gave you this benefit of being in this installment agreement and paying your taxes over time, a little bit at a time, but you're not compliant per our rules. So we're going to ixnay that. It's a very bad thing. So just make sure that you file your tax returns and that you get and stay current.
One comment, and Alicyn, 100%. I think if people knew how common it was that people were in installment agreements to pay off back taxes, I think it'd be a very different thing. The fact that I read is that so anytime there's a new presidential administration, there's a whole host of people who get have to have Senate approval for their jobs, right? Federal administration. Approximately 10% of the people who require Senate approval, jobs so senior in the federal government that they need over some sort of oversight and approval to get, 10% are in IRS and or state payment plans for back taxes. So if you think about it, these are people who make large salaries, have had good jobs, moved along the ways, and it happens. You have a bump in a year, you have something that comes up personally where you just can't do it. They give you time. It's part of the process, and it's part of paying taxes, is that sometimes it takes a few years. That's fine. You pay interest and that's it. You're done. And that's something, I know Alicyn helps and I help with. Let us do it. There's no, what, I forget the word you used, Alicyn, but you used a really good word. But there's no shame in it, right? This is something, the process exists. Let us help you with it. So thank you so much for that.
Tracy, how are we doing on time?
And find the unmute button. We are good. It's 1:44 if you want to continue, and then we'll see if there's any questions.
Okay, and I'm sorry, this goes till 2?
Yes.
Yeah.
Okay. Yeah, so I'll just quickly talk about retirement plans, because probably if you're just starting out, it might be a little too soon for you to be overly invested in having a retirement plan through your business, but it will come up probably fairly quickly within, the first couple of years or so. So I just want you to be kind of aware at a broad view what the options are available to you. Because like Matt was saying earlier, when you're working for a company, maybe you have a 401k, a 403b, it's just kind of done for you. You just decide how much you want to put in through your paycheck every pay period, and then it's on autopilot. When you're a business owner, it's not an autopilot. You're making decisions for yourself, and if you have employees, you're making decisions for them. So kind of quickly, when you are first starting out and maybe you have not so much in terms of business profits, an easy approach might just be, it's the third one on the slide, an IRA. IRA is around $6,000-7,000 a year contribution, and that might be plenty for you when you first start out. And they're very, very easy to establish those accounts. You can do them for yourself. Kind of as you move up in terms of profit, the first two, and I guess, the first two options are really more interesting. The first one is a SEP IRA. It's just a type of IRA that lets you put in more money. And the solo 401k is similar to like a 401k that you've been accustomed to, but it's just for business owners with no employees. Those are both nice. Those are, I would call them moderately challenging to implement. You would definitely need some help to get them set up. They will allow you to put in more money based on the profit in your business. And then that last one, Roth 401ks, and well, maybe I don't like how the slide worked out, but it should be like Roth 401ks and traditional 401ks. Okay, these are really administratively challenging to do. Again, these are what, when we work for someone else, we take for granted. We just put money in these. There's a whole industry of people that set up these kind of accounts. They make sure they run, they make sure that the funds are invested properly and no one absconds with them. And so if you're humming along and you're doing really well and you've got several folks working for you, at some point you might want to establish a 401k plan for the company itself. But I would say that's not anything that you have to worry about like right out of the gate.
I 100% agree, Alicyn. One thing I always point out, especially for people early in the year, is an IRA is by far the easiest. Go to your bank, they will open an account for you. It'll take half an hour, maybe, and you can actually contribute to an IRA after the year ends for the previous year. And so the benefit of that is you can finish the year, you can say, okay, I've made this amount of money, and then it becomes deductible. It's a deduction for you as an individual. So it lowers your income, lowers the amount of tax you go, and it'll help you save for the future. So IRA definitely early on is it. And as you start going, as you grow, if you have 6 employees, a 401k is a great way to incentivize those employees to show their value, say, okay, you're going to put money in on, you can contribute on your employees' behalf, on your own behalf, and you can really turbocharge it, especially if you're, over 50, you can contribute more and more into different accounts. So that's the thing you can do. And Alicyn's point about being a whole industry. If you know other people doing what you're doing, ask them what they're doing. Ask them how they're doing it. There are people that I run into that set up, 401ks and things like that for businesses in specific industries. And that's how they do it, and that's how they get their thing. So what the advantage is, they know your industry, they know how cash flows work, they know when you can contribute, and they'll understand your business, and that's great for any advisor. And I think that's really helpful. There are a lot of flavors of retirement plans. There's more than we could talk. We could do a full hour on flavors of retirement plans. Alicyn, knows much more than I do. So I think it's important to know that there's different things you can do. IRA is by far the easiest one to do, and they sort of go up in complexity. But talk to other small business owners, people in your industry. I think as someone who's worked places, worked for himself, and now has gone back to work at a large law firm, you really can, knowing what's out there is really helpful. And there's different advantages and disadvantages to it. Go to the next one. Advisors. Okay. So, do I need advisors? Yes. Look, I'm biased, right? I'm a lawyer. I think everyone should have a lawyer. I admit it. It's a bias. It doesn't mean I'm wrong, but it means I'm biased, right? But what, people always ask, well, what do lawyers do? What do accountants do? And from my perspective, right, lawyers do a number of things, formation documents. Alicyn, said it earlier, the vast majority of entities in the United States of America are formed because of with states, not the federal government. The only real exceptions you're going to find to that, there's a couple of bank types that are federal and a few others that we're not going to go into because they're really, really specific industries. Oil and gas, a few other things have federal. For the most part, when I had my own entity, I had an entity, it was a New York State entity. I'm in New York, that's where I registered it. I'm not a huge fan of putting entities in states where you don't live, you don't operate unless the business gets to a point. So they're going to create formation documents, help you with where to get done, with registering with the business. There's a variety of things you need to register with. There's, workers' compensation can be a thing. There can be unemployment taxes if you have employees, and things like that. They're also going to help you with contracts with vendors and clients, especially early on. They're going to review things. They're going to create a form for you to do. I know when I was a solo, I had an engagement letter that I sent to clients, and I hired a lawyer to review it because I'm a tax lawyer. I do one thing, right? So I hired a lawyer who would help me get one that made sense, that worked, that protected me and was good for the client as well. So I thought that was really helpful. And that's what lawyers do. I'm sort of a weird hybrid, right? I do tax, right? So I go into areas that's very common for what people call accountants. Alicyn will get a little more into that in a moment. But I think that's the key is that's what lawyers do. They help with formation. They help with thinking about things. If you bring on employees, you're going to need a handbook, things like that. So, form a relationship with a lawyer early on and ask your friends. You'd be surprised, how many businesses have lawyers, have ones they really like. And I will tell you from a lawyer perspective, the best referrals almost every single time are from clients, because that client is going to say, this person, Matt's good at what he does. He knows what he's doing. And that next person comes in and they have an idea of what they need to do. And you can really help them and go in that way. Now to talk about what accountants do, Alicyn, you're up.
Yeah, I'll do this briefly so we have time for some discussions. A couple of things. So it's kind of like, what is an accountant? I don't even think I'm going to try to answer that. I would just say, as you're looking for someone to help you with your bookkeeping, paying bills, running payroll, registering in states, maybe getting your taxes done, I would go back to Matt's point. Ask around, ask people in your industry that you're working with, ask your friends, whoever, ask around, who do you work with? Who do you like? And what is it they do? I would be less concerned about what their title is, what their license is, what their designation is, the letters behind their name. I would ask, what is it they do? That will help you decide how you can fit them on your team or if you need to keep shopping. I will say this, be very, very careful. I see this sometimes. They're called ghost preparers. These are people who will say they will file your tax return for you, and they will, but they're kind of fly by night. They are unscrupulous. We don't really know what they're doing. They may be giving you a legitimate tax return to look at, while behind the scenes, they file a fraudulent one. Folks like me, we are required to put our name, our address, and an identifying number with the IRS on a tax return. So if you look at a tax return, any tax return that you've paid money for someone else to prepare for you, you should be able to find all that information there for you. If you have someone you've paid to prepare your tax return and the copy they give you doesn't have their name, doesn't have their business name, doesn't have their tax ID, doesn't have their phone number on it. Absolutely not. You don't know what they're up to. So those are the two big things I would say.
I think that's great. One thing I want to do I've seen a lot is people prepare returns for other people using TurboTax and other software like that. That is a gigantic no-no. Run away, run. You can get, if you make most states up to about $60,000 or $65,000 a year, if you make that or less, you can actually get free tax preparation through the IRS website. It is free. It is through commercial software. They'll ask you some questions. They'll filter it to where you need to go. So don't feel like, oh, I only make $50,000, I have to pay. You actually don't. It can be completely free. So that's one thing I recommend and think about. Alicyn.
Yeah, I think that's it for now. Why don't we see if people have questions? If they don't, we can do the rest. But I'd rather answer questions if people have questions.
I think I agreed. If anyone has any questions, feel free to raise your hand or put them
Look
in
at
the
the
chat.
chat. Look at the chat, Matt. Yeah, this is a good question. Do you want to answer it or
I don't see a question.
in the chat? Great talk. Insurance guidance. Liability differs by state, workers' comp.
I don't see it, and I feel like I'm missing something. Go ahead.
Oh, okay. So Catherine asked, thank you, Catherine, because you said great talk. That's very kind. What about insurance? Yeah, so your insurance will differ by the state you're in. It will differ based on what kind of industry you're in. It will differ whether you have people working for you or don't, whether they're contractors that maybe have their own insurance. And there's all kinds of insurances, right? There's like health insurance. Are you required to provide that? There's liability insurance for your business itself, for the people in the business. Like I have, because of the work I do, I have like cybersecurity insurance. There's just so much. I would say the best places are one, your attorney, because they are the person who is most concerned overall with your asset protection. You know, the insurance providers are going to be helpful, but I would start with an attorney. So, and then I would ask your colleagues, other people, your peers, other people that are doing what you're doing, what are the kind of insurances I need? What do I need to get started? So I would hit up those two places first. Did you say free tax under for 65 on the IRS website? Yes.
I actually, I always quote the amount, I get it wrong, but according to the IRS website, right, that link there, it's 73,000 adjusted gross income. So that's actually a pretty good, $73,000 is not a small salary. It's nothing to sneeze at. And so you can really do well. I know I have a number of clients, thank you, Tracy, who do use the IRS free prepare. They use that, and it's, if you go through it, they ask you some questions and they're like, okay, you can use these depending on which ones they are. And just for context, Tax Act, H&R Block, TurboTax, all of those that advertise $1 billion, they're part of this program. They let you use their software for free as long as you meet it. So there's a number of them. There's about 20, 25 that are involved. Hopefully one point the IRS will put together their own software. I think that would be much better to kind of get everyone else out of the game, but that's a personal view. But yeah, you can do it for free, federal and state for free. So there's no need to pay at that point. And especially if you're starting your own business, that it takes time to do it yourself. It's definitely a little faster to let someone else do it, but every penny helps, as Alicyn will say. So.
All right, Matt, there's a question about home office. Do you want me to take that?
Oh, you do it. All you.
Okay,
Alicyn.
so I have lots of clients who take a home office deduction, and I have some clients who don't qualify. So you do have to work. You have to be a business owner. Used to could be an employee, not under current law. So you do have to be a business owner. Secondly, you actually do have to use your home for work. Now, it can be the administrative piece of it. It could be where you do your bookkeeping and your sales calls and your marketing, but it does have to be somewhere in your home you work. You have to use that area. It doesn't have to be a whole room. It can be part of a room, but that area has to be used regularly and exclusively for your home office. So if it's your living room, probably not. Your kitchen, probably not. But like, for instance, I'm in my home. This is my home office. There's nothing else going on in here. This was supposed to be a guest room, but I turned it into my home office. There's no room for guests to stay in here. And I use it regularly every single day. Regularly isn't really defined, but I've heard 10 hours a week as a good rule of thumb. And again, exclusively. So it cannot be used for something else. But the question goes on, can I deduct pro rata share property taxes, home internet, utilities, etc.? Yes. Yeah, absolutely.
Will tell you my one caveat, and I've done this audit, is the IRS will come to your home. And if you say, no, you can't come, they will say, no, you don't get the deduction. So, and so just know, and I always say, and Alice and I have actually discussed this, and we were preparing for us to discuss this, is it worth the deduction, right? The deduction may be $200. And you say, oh, $200 is great. The tax effect of that might only be $30, $40,
Yeah.
$50. Is $50 worth the auditor coming to your home? That's a decision. You can't make it.
Make sure you can claim the deduction. Yeah, for sure. What is this H&R Block from my community in Texas bought my home?
Yeah, I would recommend, that's a question I'd recommend go to the helpline, have someone do it. I think it's a little specific. If you have a return, it was done incorrectly, you can amend for up to 3 years from when you filed it, possibly longer, but generally 3 years. I'd recommend going through the helpline for that. I think we need some more specific information for that than I think we have time for on this. But thank you. No, I appreciate it, and definitely ask questions. I know we're running short on time, but I can stay a few minutes over if we have time.
Yeah. Does anybody have any other questions for us? We answered everything, Matt.
We're just that good or that lucky. But if anyone has any questions that are specific, definitely go to the helpline. Alicyn and I are just two of the people who do it. So we really appreciate your time. Thank you to everyone who came. Alicyn, any parting words, or Tracy?
No, I want to say thank you. I will say one question that I saw on the helpline not too long ago was a pretty interesting one about your children having their first job and when do they need to start filing. So what are your thoughts on that?
I'll give Alicyn the first crack at that one.
Yeah, for sure. So I have a lot of clients whose kids are teenagers and they're working. And so generally, if your kids, as long as they get a W-2, if they get a 1099, that's a different story. But if they get a W-2, as long as it's under around $12,000, $13,000, they probably actually don't need to file their own tax return because it's probably under the filing threshold. And so as long as there's no tax withheld that you might want to get back, they may not even need to file a tax return. Sometimes though, they do have taxes withheld. And so you go like to the free file website and you file a tax return for them just to get that money back. Every now and then I've seen where I filed a tax return for a teenager and they owed. Nobody's happy. Nobody is happy. It happens. The other thing is that to know that they can make an IRA contribution. So sometimes I see if parents have a little bit of free cash, they will chip in and do like a Roth IRA contribution for their kids based on their income. And I like that. And sometimes, as long as it is legitimate, I do have business owner clients who will let their kids come in and do work for them, administrative work mainly, answering phones or that kind of thing, and pay them for that. And that can work out nicely because it can be a deduction for the business. But if it's under the filing threshold, kid gets $3,000, $4,000, $5,000, whatever for the whole year, then that can be, a way for the kid not to have to pay taxes and still get an IRA contribution. So that, again, has to be legitimate. But
one comment on that. One of my favorite things to do is people who have kids who are in college, they get a summer job, they make $6,000 over the summer. One of my favorite things to do is have them file, at Alicyn's point, make a Roth IRA contribution. They're basically going to get their taxes back and they contribute after-tax money into a retirement account. Now, they're going to get annoyed at you because they can't touch that money for years and years and years and years. But when they're 65, they're going to be really happy because that money's going to compound and compound and compound and compound. So it's a really good way to be as efficient as tax. So for people with, people who are older and work for a period, especially if you're in college, there's some really good tax credits for college students that can really help and eliminate tax. So that's one thing I'll say recommend to a number of my clients. So it depends, the specifics depend, but that's one thing you can do.
Right. Well, thank you so much for your time, Alicyn and Matt. This has been great. I've learned a lot. I hope everybody else took lots of notes. Our recording will be available soon, so that should be coming out to you via a link. And again, if you have any specific questions, please go ahead and fill out a form on our helpline. We'd be happy to help you. And on behalf of Savvy Ladies, thank you so much for joining us. And thank you so much, Matt and Alicyn. This was great.
Thank you. Take care, everyone.
So much. Good luck with your businesses.